With regard to commodities in general, you know my take on it. I think that's the place to be. I think people need exposure to commodities, gold and silver. Silver, my favorite of all time. You know that. Everyone knows that, who at least follows my work here. I think commodities are going to, I mean, it's just a simple equation. If we know eventually, and this is what they're doing here, the debt market is going to melt down, and that's going to send the world stock markets off into an abyss that people are not going to believe. So cash bleeding out of the debt market, cash bleeding out of the stock market is going to make its way into commodities. And commodities are going much, much higher, especially ones that are unbelievably suppressed.
Market trader Gregory Mannarino highlights the current financial landscape as the largest and most vicious bear market in debt, amidst escalating government spending and the eruption of multiple conflicts. With a keen eye on the market, Mannarino anticipates a notable surge in commodity prices, particularly precious metals, given the upheaval in the global scenario. The recent uptick in gold and silver prices during U.S. trading, propelled by safe haven demand amid geopolitical tensions and the potential for an expanded Middle East conflict, underscores the current market sentiment. While gold steadied in Tuesday's trading session ahead of the Federal Reserve's policy meeting, it remained poised for its most significant monthly surge since November last year. Mannarino identifies the potential for a substantial uptick in the value of commodities, especially those perceived as undervalued within the market. However, he expresses skepticism regarding the Federal Reserve's approach to combating inflation, questioning the effectiveness of its strategies despite claims of addressing the issue. Anticipation builds ahead of the Federal Reserve's meeting, where the prevailing consensus suggests a continuation of the current high interest rates as a means to manage inflation without significantly impacting the robust U.S. economy. Futures traders echo this sentiment, attributing a near-certain probability of the Fed maintaining steady rates in November. According to CME Group data, the convergence of market opinions, coupled with the geopolitical unrest and the Federal Reserve's strategy, outlines a complex and uncertain economic landscape. Mannarino's insights, combined with the market's expectations, reflect a cautious sentiment regarding inflation and the strategies to address it amidst ongoing global turbulence. Futures traders assign a probability of 99.9% that the Fed will vote to hold rates steady in November, according to CME Group data. Before diving into Gregory Mannarino's interview, subscribe to our channel and give this video a big thumbs up.
It's a volatile market right now, especially because of what's going on over there. One day they think the war is going to slow down. Right now, it's about speculation as to where that war, the new war, and all these wars are going to go. With regard to commodities in general, you know my take on it. I think that's the place to be. I think people need exposure to commodities, gold and silver. Silver, my favorite of all time. You know that. Everyone knows that, who at least follows my work here. I think commodities are going to, I mean, it's just a simple equation. If we know eventually, and this is what they're doing here, the debt market is going to melt down, and that's gonna send the world stock markets into an abyss that people are not going to believe. So cash bleeding out of the debt market, cash bleeding out of the stock market is going to make its way into commodities, and commodities are going much, much higher, especially ones that are unbelievably suppressed. And in my view, as you know, and I just look at a couple of metrics. I look at the Dow gold ratio, and I look at the gold silver ratio, and just trying to figure, if we just understand that the stock market has no bearing on reality, it has no place being here. It's just easy money that's kept this propped up. Where's the bottom? The bottom could be where 6,000, 8,000, lower than that, 3,000. We don't know where it is. We know where the Fed stepped in at 6,000. I think we're going to get a 1-to-1 gold to the Dow. And at least a 15-to-1 gold silver. But with regard to crude oil and commodities in general, they're all going up. Cash is just going to look for places to go. It always does. And it's going to go into other things as well too. Artwork, classic cars, all this kind of stuff. But commodities are going to hurt people the most because it's going to become very difficult for people to get this stuff. It's going to become very scarce. It's unfortunately, we're marching towards their worst case scenario because that's where they want us. They want to get us by the throat, as they always do. Problem, reaction, solution. The current system is being dismantled. It's being dismantled by design. Central banks are behind it. A lot of people aren't going to make it out of here in the literal sense. I really think there's the bigger part of this is control. The central banks, who are the one world government we've all been warned about, They would nothing would probably make them more happy than to reduce the population of this world, probably by a lot. And they're going to, in my view, they're going to use tricks, whatever they got to do to get people to fall in line. It's working. We're creating more need for debt, a bigger black hole for debt, and that hole can't be filled. And again, what's going to happen here is what I think you and I have spoken about a million times, is they're going to blame the war. They need a scapegoat. This war, this expanding war, it started with Ukraine. Now Israel is going to get bigger here. They're going to use this as a scapegoat. It's the war's fault why the financial system is collapsing. It's the war's fault why the Federal Reserve and central banks can't get a handle on inflation. But what they're not telling people about, again, I mean, it's a lie by omission. You turn on the mainstream propaganda, and they're talking about the hundreds of billions that are going over here, the hundreds of billions. They're not talking about how it's massively inflationary. It's unbelievable. But the Fed's in the fight of their lives. Oh yeah, we have a meeting this week, don't we? Wednesday. They're not going to raise rates. They're not going to, in my opinion. I could be wrong, but I doubt it. I think they're going to stand pat here, but they're still fighting inflation. This is a lie. They've been selling people this lie repeatedly. They knew from the get-go this would not be temporary, this would not be transitory, and that it would continue. And it will continue to get much worse moving forward.
The rise of bad loans within the U.S. banking sector is a growing concern, attracting attention from industry experts and keen observers. Particularly alarming is the potential risk posed by America's commercial property collapse, which threatens the overall financial system. The aftermath of the pandemic continues to haunt the commercial real estate sector, with office buildings purchased through debt transactions remaining significantly underutilized, even 18 months after the pandemic's official end. Mannarino highlights the increasing trend of loan defaults across various sectors, signaling a potential sign of financial instability. Moreover, experts warn of an imminent collapse in commercial real estate, labeling it as a precarious ticking time bomb, thereby raising significant apprehensions about the financial landscape. Historically, monetary systems were often backed by commodities. Presently, most countries rely on fiat currencies not linked to a specific commodity, yet some retain reserves of commodities like gold as a store of value. Mannarino advocates for a potential return to a commodity-backed monetary system, suggesting a gold-backed currency as an example. He posits that a wealth-based system would impose constraints that could limit the ability of nations to engage in protracted and costly conflicts, citing the potential for a more balanced and measured approach under such a system.
It's so obvious to me that the banking sector is in trouble, and I mean more so than anyone is being allowed to know. It's just so obvious. How do we know these problems exist? We could just go back to what I told people over a year ago. No deposits, no loans, and no deals. And this is not just for the smaller banks. The larger institutions are also in that same boat, but it's even worse. Not all the larger institutions, let's talk about them real quick. They've loaded up on government debt, which is now they're watching their portfolios value evaporate as bond yields are rising. I mean, all you need is one or two functioning brain cells to just see this happening. Not only do we have this happening, but we also have loan defaults across the board, which is skyrocketing. And then on top of that, there's a whole other thing that we haven't even touched on. This whole real estate issue here. This is going to implode. This commercial real estate is a ticking time bomb. It's going to go off. And now we're starting to see warnings. Again, all this stuff that you and I have been trying to tell people for how freaking long. Maybe they'll start paying more attention, because there are people like you and I believe the people that follow our work, that are able to see a little further down the road than maybe the next guy. But it's not so hard to do. You just look for cause and effect, and then you got to realize, what's the goal? Who's our real enemy? And in my view, you know who that is. It's the central banks. This is the public enemy number one. They're out here destroying the world. They're destroying the world economy by design. They're taking it apart. They're expanding wars. They're funding wars. Central banks are responsible for this entire thing. They fund all wars. Where does the cash come from? You see, we heard from President Biden, and we heard from recently from former President Trump. Oh yeah, we're gonna support Israel. Everything we got. I'm all about. Look, they're not telling people where the money's coming from, and that bothers me. Okay, yes, go spend hundreds of billions, but we don't have it. No country has a war chest. Another one. You could go on and on. Janet Yellen too. Any of these freaks, any of our politicians, they want to spend money that we don't have. Okay, it's Why can't we be told the truth? Why can't they tell people we are broke, we got no cash, we don't have a war chest to fund this war or to fund that war or anything. We have to borrow that cash. It's unbelievable. But it's part of the game that's being played on the people of not just the United States, but the people of the world. You know, it's incredible. Why did our forefathers here in the United States want to have a hard asset backing the currency? Because they knew that we would not be able to fight or fund endless wars. The fiat monetary system is a curse upon the world, people, and they don't know what's going on. Again, if we had a commodity-backed system, which we'll never have, because this is how central banks keep their power, and they're willing to fund anything. They'll fund it all because they have the ability to add digits to a screen. If we had a gold-backed or a commodity-backed system, we couldn't fight endless wars here. If we went back to a wealth-based system, again, central banks have taken over the world here. They've taken over the economy. They've taken over the financial system, the financial markets. Then we wouldn't be able to fight endless wars. There wouldn't be, okay, let's send $162 billion over there or another $100 billion. We can't do it. But now that central banks, we have the ability to just conjure this cash out of nothing. Okay, we can do whatever they want, and they fund both sides. We all know this. How many times have we been warned that all wars are banker wars? I mean, I don't know how much more proof we need. It's just in our face.
The U.S. Federal Reserve's two-day monetary policy meeting will begin later on Tuesday, and the central bank is widely expected to leave interest rates unchanged for the second consecutive time. What potential impact could this decision have on the prevailing economic landscape and market sentiments? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.